to talk to you about is NOR, and I would like to tell you the thought process behind my buying decision and how it went down in this terrible, terrible market today. As you can see, the market finished at almost 3% down on all major indicators. This has a major impact on all stocks, and pretty much what you would expect to happen in a normal market did not happen due to the market conditions. So this is my second trade for the day. Let me explain what happened. In this particular case, there was no pre-market movement. There was no news. There was nothing before that would have triggered a buy on my side. However, as you can see, in this particular chart, when the day started on Tuesday, we started fairly low. Yeah, the stock opened at 390, and then suddenly, after the open, there was a surge in volume and there was a surge in interest. If you check a chart, there's always a volume bar at the bottom, and obviously the higher the bars, the more the volume that flows into the stock. So when there is a volume surge, usually you want to be there. You want to be at least watching the stock because there's a chance that it's going to break out from a previous high. In our case, a previous high is right here at about 414, 415. Okay, so I was watching stocks with high volume surges. I have a few screeners set up that tell me when a stock has an unusual volume surge so that I can go there and check it out myself. The same thing happened with NOR, and I was following NOR throughout this green bar, but I just didn't have the initiative to buy in yet. I saw this stock from about 420. However, at that point, I didn't act quick because usually when a stock breaks out from a high, from a previous high, it means that it's going to run for a while, especially if there is volume behind it. So our previous high was about 415, right here. And the moment it breaks through, is the moment that indicates that you might want to be part of it because this might be running for a while. It's not a long-term bet, it's a short-term bet. But if you buy at the right time, if you buy at about 420, just to make sure it's not a breakout fake out, which would be obviously something that makes the stock turn back. If you want to be in it, you would buy about 420, and then you could ride the wave all the way up till the next resistance, which if we check a longer time period, currently we are on 1 day, right? If you check maybe 3 months, you can see how the stock behaved earlier, and you can also see where the stock formed certain resistances. Okay, so if you want to go back, let's say 1 year, you can see that we are significantly lower in a year's chart. However, as a day trader, you don't always care about it. All you care about is where's the next resistance, where's the next line that could actually break the stock, break the run that the stock is in, right? And you can see that there's one about 370, that doesn't matter. And then there's one about here, which is about 507. Okay? So realistically, your chances, excuse me, I'm going to go back to 1 day. Realistically, your chances here are that once the stock breaks the daily high, we already looked at it earlier. Let me go back there. Just 1 second, here we go. So once the stock breaks that daily high, as you can see, it's right here, about 415. It can potentially run until about 507. So that's quite a big gain there, if you think about it. So that was my plan. However, I acted a little late, and as you can see, I bought twice. I bought once at 477, and I bought once at 450. I bought twice, 200 shares, and that brought me to an average of about 460 something, 460ish. And obviously the plan was to sell into a spike, to sell into hype. However, due to the current market conditions, that's not what happened. So I had to sell at a stop loss of 441 because nothing seemed to be breaking out today, or at least nothing that I watched was breaking out. Sometimes you just pick the wrong stocks. There were stocks today like Ford, or ASTI that really broke out today. However, sometimes you can't watch all the stocks at once. So you gotta pick your choices and you gotta stick to them and you gotta play the game. So this is what I did. I bought it at the breakout at about 477 and 450, and I was anticipating. It's never good to hope in trading. I was anticipating a 40% run up, which would have made quite a good sum of money. However, as the stock broke down and I saw no reason to stay in it due to the market conditions, I sold at 441. And as you can see, the only thing I can be happy about here is that was a great decision, because since that 441 level, which is here, it went all the way down to 414. So that would have been, if you don't use stop losses or mental stop losses, or if you don't sell your stock when it doesn't go your way, you're going to lose money big time. If you use stop losses, you can get unlucky. The stock can go the other way. However, if you sell it quickly, there will be no issues. You'll lose money, but you won't lose as much as you would lose if you just keep and hope, which many people do. Don't hope. Be emotionless. Don't try to renegotiate your plan with yourself. If you have a plan, my plan was to buy on the breakout and sell in the spike. Didn't work out. Sold it quickly, moved on to the next stock. This is the biggest lesson here. Cut your losses quick. That's our #1 golden rule. Thank you for listening.